That was a perfect time to have a burp. Hey everyone, this is Kevin the Apptrepreneur, and hey, we're doing a little bit of a surprise live stream tonight. There will be a video tomorrow morning. I recorded it. I wanted to do this with the graphics and everything. Unfortunately, wife went to bed early, and for that matter, she's really hot, so the fan is on, and it's really, really noisy over there. So I just kind of decided, you know what, we'll just go out in the living room, and I can kind of tell you what the numbers are from what I'm reading. Maybe I can show them to you, all that jazz. So anyway, before we get started really deep into this, I do want to mention to people that this is in fact a live stream. That means the topic can go on for a long time. It might wander a little bit. It might not even have much of a point. However, the main topic that you see will in fact be in the first 15 or so minutes of the video. So I see Team D'Angelo is here. Welcome. We've got 10 people, 2 thumbs up. Thank you guys so much for joining us. And well, this was I was not preparing to make this video, but after watching the stock market a little bit today, which I do on a daily basis, I have to say, gig economy stock makes no sense. I have never seen a business that is bet on so heavily and dumped so fast than a gig company, because they don't. I mean, here's the thing. These companies are not profitable. This has been well discussed. It's well documented. They're not profitable. Who knows when they're going to be profitable. We all know that people are investing in what they hope is the future. Like, hey, these are the next big things. Everybody loves these products. Yet these products don't make money, so from an investment standpoint, it shouldn't make a lot of sense. And yet people invest them all the time. And the stock goes up and down based almost exclusively on arbitrary numbers that may or may not actually pan out. No clean MPG. Uber's rideshare is not profitable. They lose $250 million every quarter. So they are not profitable at all. They make money, but they make money on eats, but they are still posting negative profit. Like, they are still posting losses. So they're not profitable. You can say wrong all you want. The numbers don't lie. Anyway, what's even going to make my point even more is I'm going to pull this article from Barron's about Lyft's earnings report. Lyft had their earning reports. Now, I stopped reporting on these reports a long time ago because they were pretty much all the same thing. Huge losses every single quarter, but hey, we'll be profitable next year. That's what all the earnings report says. And that's pretty much what this report said here. Because Lyft, the ride-sharing company, posted revenues of $955.7 million, which is up 23% of what the Wall Street thought they were going to get. They thought they were going to get about $898 million, so they definitely beat projections. But they say, in what will likely come as a pleasant surprise to the street, Lyft posted an adjusted EBITDA, which is, like estimated profits, or earnings before interest, taxes, loss of $85.2 million. So they lost an estimated $85 billion. It's not billion, million. Narrower than the company's projected loss of between 140 to 45 million. Now, here's the thing. This company is still losing money. This company is still losing money. And for that matter, we still have a pandemic out there. A pandemic that could at one point maybe even shut a rideshare. You never know. I don't think they're actually going to do it. But the business is down 85%. 85%. So here's the thing. This report was for the first quarter. For the first quarter, they brought in more money than they thought they were going to do. And they lost less money than they thought they were going to lose. But here's the bottom line. still lost money. And here's the thing, the next quarter is not going to look this good. Oh no. I expect they will lose more, because not only will they be losing money on rides, but guess what? They're doing a heck of a lot less of them. Now, one of the things that they did add is that they expect to cut about $300 million in annualized expenses by the fourth quarter, aka driver bonuses. They've laid some people off. So Lyft managed to take this loss and turn it into a win for them. Like, again, Lyft is still not profitable. They're still losing money. And their business is down 85%, which interestingly really wasn't discussed in this earnings report. Now, they did mention that while the C virus pandemic poses a formidable challenge to our business, we are prepared to weather the crisis. We are responding to the pandemic with an aggressive cost reduction plan that will give us even leaner expense structure and allow us to emerge stronger. Our competitive resilience and commitment to our culture and values will put Lyft in the best position to deliver on our mission of improving people's lives with the world's best transportation. Yeah, but they don't mention that because of this pandemic, for the next quarter, they're going to be looking at like 85% less revenue. So they definitely took this and spun it as best they could. And in all fairness, that's what these earning reports are supposed to do. When things are great, it's popping champagne, it's drinking away, it's, every sort of, high five you can imagine. When things are bad, or when they're not as good as they could be, here's the thing. They acknowledge where the company is doing bad, but they try to spin it as a win. So, for example, Disney also had their earnings report, and Onward was a flop. Straight up, Onward, the movie, was a flop. In the earnings report, yes, they mentioned that movie lost money, but spin it as a win. It's because the C virus closed down, and had the C virus not shut down the theaters, guess what? That movie would have been profitable, which it probably wouldn't have. The early numbers were not very impressive, but that's called turning a loss into a win. And that's what Lyft did. Now, here's the thing. We've had 5 or 6 of these earnings report that involves Lyft and Uber not making money. Not making money. They're losing money in every scenario. And in fact, because of this pandemic, one thing that they didn't actually bring up is that, hey, all that money towards the self-driving cars, which really should be on the road by now, you're watching my channel long enough, you know they're a year late. Well, they can't invest in those anymore, which that's when they're supposed to be profitable, but they're not investing in it. So when you really look at the optics for Uber and Lyft, as someone who studies the company, who's been part of this company, who has talked to people in the company and people who continue to drive for the company, their optics are not very good. And yet, what was the result of, hey, another quarter's come and gone and we've lost money and we're on the verge of losing a heck of a lot more because revenue is going to be down 85% the next time we're on this earnings call telling you about our earnings? Well, it popped. It went from $26.12 to a little over $30. What's more, even though Uber is not expected to report their earnings until tomorrow, they had a similar increase. They were at $27.82, and at the end of the day, they were trading at $29.98. Again, from a company that has never posted a profit. But figure this one out. GrubHub closed at $50.83. They have an earnings report that basically earning estimates were missed. However, they were slightly profitable. GrubHub's actually been doing very well for themselves during this pandemic. Very, very well for themselves. So yeah, they missed their revenue, but there's profitable, and that encouraged the stock to dip, go from $50.83 to $49. No, I'm sorry, $47.80. Gig economy stock makes no sense. It really makes no sense. And here's the thing. GrubHub will really truly show some profits next quarter because people are using a heck of a lot more GrubHub than they are Uber and Lyft, I can tell you that. And yet, for some reason, GrubHub takes a dip on actual profits while Uber and Lyft soar on potential profits and actual losses. This gig economy stocks don't make sense to me. They really don't. So let's see. See here another. Let's see here. Let me make sure. Oh, okay. I misread something. I better clarify this. GrubHub did lose about $33 million, but their income rose by basically the same. No, they rose a lot more than Lyft. They rose to like 370 million. So okay. Clarification. GrubHub did lose some money, but that makes it even more confusing because. Okay, so GrubHub and Lyft both are in the same position then. They both made a heck of a lot more money than they expected to, but they both technically lost money. So why is GrubHub the one that's getting slammed on the stock market while Uber and Lyft are raising in value? I don't get it. I really don't get it sometimes. This is one of the things about the stock market that can be pretty frustrating, is that stocks rise and fall basically on the whims of the investors. It's interesting that people would invest in companies that don't make money, but then Amazon for 20 years didn't make money, and now they're like the shining light. Another stock that I have bought and sold more times than I can count these last couple months is the Virgin Galactic Holdings stock. That stock has gone up and down like a roller coaster. I have consistently bought it when it's low, and I've continuously sold it when it is high. So there you go. I don't know why that stock goes up and down, but people are hoping that maybe it will make money, but it's not making money yet. The gig economy stock, I don't really know why it acts the way it does. It doesn't make any sense. Like, and it's and both companies, by the way, have sucked on the stock market. They have never gotten back to their IPO. I think Uber got there once, but otherwise they have traded well below their value. Lyft opened at $87 a share. Now it's trading at $30 a share. And that was after the jump today. Uber started trading at 45. I think I got to 46 at one point, but otherwise it's been trading way below. And yet there's analysts that still say, buy it. This is the future. I don't see it. I don't see it. So anyway, that's my little ramble. For the record, I did sell all the stocks that I had in these business because, well, they were going too low and I didn't want to lose money on them, so I sold them. But, c'est la vie. So anyway, that's where we're going to leave the main topic. For those of you who watch this in the future, I'd like to know what your thoughts on all this are. Comment below, like, share, subscribe, and as always, flame responsibly. And now, for everyone who's live, we are going to do I don't know if it's going to be like an hour. This will probably be like 15 minutes or so, but we'll do like a little back and forth. So, hey, Robin, how you doing? Hey, Patsy, Patsy Skelton. Oh, sorry, I misread that. It's Patsy. I'm sorry. I'm so sorry. Clean Energy say rideshare is profitable. They lose on eats. No, in every earnings report they lose on the rideshare. They don't profit they profit off the eats. Kyle says, made some change on GrubHub after I bought it when the total market tanked and bounced back and sold that so I could buy TP. Yeah, no, I bought a bunch of stocks when the market crashed, and that's one of the few things that's doing really good for me right now. So anything else? Yeah. So you're trying to say that drivers that can figure out how to make money from this company, they're the only ones that are going to win for the short term? Maybe. I don't know. Depends on what you took from all that. Drivers sees that for the most part, we are over this pandemic. Businesses in the San Francisco North Bay are opening, going against Governor Newsom orders. It was on the news tonight. Yeah, I I've got mixed feelings about that. I mean, I understand it. I understand it, but this is me. You see, me and my friend kind of agreed to this. We agreed that that Governor Newsom did like a very good thing when he closed the state. That was a good step one, but he seems to have not prepared for what to do after that. I mean, he's basically saying like, well, we won't reopen until the numbers go down. Well, California's been closed for a long time. People are out of work. They're hungry. The food supply is getting disrupted. People are going to start defying them. And yeah, so I don't know if I like that, but I certainly understand it. Kyle said Lyft is shutting down its rental program here in DFW. They are partnering with Hertz, which is filing here bankruptcy. Yeah, that strange things like that. Nathaniel says people are putting hope into something that doesn't have any hope. No, they don't. Uber and Lyft will probably never be profitable, not at the way they're running now. Kyle says they are partnering with FlexDrive to try and continue, but it's pretty much dead in the water. And Clayton says you are spending far too much time as a stock analyst. Well, that's the topic of the video. Outside the pandemic, you have not seen long rides at $1.25 per mile with driver pay at less than 80 cents per mile with rider on board. Yeah, but here's the other thing that you're not taking into account. You're not taking into account the marketing, the app development, the maintenance, the servers, the insurance for both the rider and the driver, and well, here, and never mind the taxes. So no, Lyft loses about 25 cents per ride. It starts at 25 cents a loss. They don't make money off the ride share. And they've been very, very open about that. They've never once said, oh yeah, we're profitable. They're always like, we'll be profitable in the future, in a year or two, which they've been saying for 3 years now. Low roller scratcher, are you making money during the crisis in stock market? Well, on paper, I'm making money, but I'm not selling the stocks and cashing out. I'm selling the stocks and then rebuying them when they go low. Mark says supply and demand. Uber and Lyft's business way down. Oh, they're way down. Low roll scratcher says, I don't understand. Zoom stock went up 100% during the crisis. Why wouldn't you understand that? Everyone's using it now. Cheap says short rides are $6.50 to $10, while drivers make $2.40 to $3 a minute fares. The largest gaps in history. No, that's not the largest gaps in history. The largest gaps in history are popcorn when you buy at the movie theaters. It's like a 1,300% markup. And again, you are ignoring all those expenses. So there you go. I do believe, by the way, that Lyft and Uber make more money on short rides. But then when it comes to short rides, most people use their Lyft line in their Uber pool, which they pay a heck of a lot less money on. So, you know, when will Postmates finally make its IPO? Not this year, I can tell you that right now. Jody says, in my area, they are opening businesses back up, but people are saying they want businesses to stay closed, but yet they are the same people. They need their job or they need money. Yeah, no, that's the thing. It's easy for these congressmen and presidents and governors to say stay at home, but they're living in their mansions eating $13 a pint ice cream. So cleaning MPG wrong, Kevin. Actually, I'm right, clean MPG, and I've got hundreds of videos on the topic where I quote my sources, so you can watch them. Bitcoin is going up again. Yep, I know. Hey, George, just stock talk. It's Moose said, with the rideshare companies, the stock prices should have gone down after California announced their lawsuit. CleanMG, quarter for Uber. In contrast, Uber's food delivery business, Uber Eats, lost $461 million on $734 million. Setting the record straight, so do it. Well, let's see here. Uber fourth quarter results. We'll just look it up real quick. news. Fourth quarter results 2019. Okay, here I think this one is it. Well, you are right. They did lose $461 million on Uber Eats. And in addition to that, they lost $378 million on rideshare. So, yeah, I guess Uber completely sucks then because they're not making money on either of their businesses. So there you go. Getting the record straight. Driver Steve says, what amount of money is worth a life? Priceless, right? But when it comes to insurance payouts and accident payouts, there is a number. At what cost to entire economy is it worth to save a few lives? Well, and I'm definitely at that point. I mean, look, I'm definitely for the shutdown, but they need to figure out a way to get people back to work. Like people can't afford, unless they're just going to suspend the rent for everyone for a few months, but people can't afford to wait too much longer not working. Everyone was ready to do this at first. They wanted to be safe, but now most of the leaders have not shown a viable plan on getting back on track, so that's why they're doing it. Clean MPG said largest gaps in history for Uber and Lyft, not Pop. No, it's not. You know what? Well, I won't block you actually. I won't because you're not being rude or anything. We're just disagreeing right now. But nope. Look, I even went. You quoted the fourth quarter earning results. I looked it up, and hey, yeah, you're right. They lost money on Eats, but they also lost money on rideshare. And they have never made money off rideshare. Never. And even though you see a big gap in what Uber's getting and what you're getting, guess what? Uber's expenses far outweigh those gaps. And here's the thing. You're saying like, oh, like what was the example you used? $6.50 to $10 while drivers make $2.40 to $3 minimum. Well, then let me quote, because I worked at a movie theater. Do you know how much like the largest popcorn that we sold cost? $11. Do you know how much we spent on it? 27 cents. There you go. So, anyway, glad to see you're here to flame responsibly, MH8. Do you think the electric scooter will be dead? No, the electric scooter will not be coming back. Mark says, get rid of Nancy Pelosi. I think she's getting voted out. I don't see. I actually think she's way more unpopular than Trump right now. Roger says, Las Vegas is dead. Half the casinos opening next year. Yeah, I think the casinos, if they only open so many tables and levers and stuff, I think the casinos could in some way make a comeback, but they would be operating at like half the capacity at the very least. Oh, you're welcome, Clean. Jody says, people are talking about Bitcoin, but to me, that's too risky as you can get into real trouble if you don't know what you're doing. Honestly, Bitcoin's kind of like stock. You buy a certain amount of it, and then you hope it goes up. That's what it is. Skip Smith said, Clean MGB's second is soda at the movies. Oh, yeah. Because, when I worked at Disneyland, like, we would charge like $8 for a soda. Do you want to know how much the cost to Disney is? 5 cents for the cup. That's all they spend their money on, because we have like a deal with Coca-Cola. Well, I say we as if I still work there, but Disney has a deal with Coca-Cola that in exchange for all the branding across the parks, they basically give them the soda for free. So when you pay $9 for a soda, 5 cents of that is coming out of Disney's pocket. 5 cents. So. Driver Steve says, I think most people in California would be very angry with our state government if they were considered mostly responsible for the closing of Uber and Lyft over the AB5 law. Well, yeah, but, Steve, we're going to disagree on that one. We really are, because, I mean, here's the thing. I believe that Uber and Lyft were definitely abusing the law. Now, I don't know why they couldn't just enforce the laws that they had on the books, but, well, as with most things in the government, something's getting abused. That's just, Anyway, clean. You keep comparing popcorn and soda. Uber pays nothing but operations for every my clean. I pointed out everything that they pay for. They pay for the servers. They pay for the app maintenance, for the app design, the marketing, for the insurance. These things cost a heck of a lot more money than popcorn and soda. That is why they lose money on every ride. That's why they lose money on every ride. Now, yeah, if they got rid of things like the insurance, then yes, I'm sure the ride would be profitable at that point. But then you'd have a real problem. Getting back to Steve for a minute, though. Yeah. Here's the thing. I know people will be upset if Uber and Lyft have to leave, but you know what? I don't think California cares right now. I think most of the world will not care in a bit because the amount of drivers who are getting on unemployment and who are sucking money from this stimulus that Uber and Lyft should be helping with but aren't, I think that's going to put a very, very bad spotlight on Uber and Lyft. That's what I think this lawsuit is about. I think it really highlighted the problem with these companies and how they are taking, but they're not giving back. And, well, right now they're down, they're vulnerable, sue them. That's their thinking. That is their thinking. Oh, hey, the line is curving a little bit more on the Johns Hopkins website. I like to see that. It does make me wonder, though, what happened to those spikes that they were talking about. In fact, yeah, it's curving. By golly, it's curving. It's really curving. We've almost got this thing under control. I'm so happy to see that. So does Disney and AMC. Sure you're talking about the popcorn and soda, but I already mentioned that. James, this is McKinsey from Memphis, Tennessee. Hello, hey, how you doing, McKinsey? Hey, Roger, thank you so much for the super chat. To you, buddy. So, all right. MHA says the government just borrowed $600,000 in your name. Take all you can get. You're paying for it. Oh yeah, we're paying for it. What's curving? Well, curving. See this line? These are the amount of cases that go up every day, and without social distancing, this line would have gone up, up, up. But you can see it's curving, and it's starting to curve down. So because it's starting to curve down, that means the virus is rescinding. So yes, businesses are going to start reopening again. Now, I do predict, because I believe that there will be a second wave, but once that second wave comes, I think people will go back to working from home. We'll go back to limiting capacity at certain locations. We won't do a complete shutdown again. Also, I believe once the second wave comes, that's going to really show companies that most people can work from home and that it's actually more cost efficient for people to work at home. I'd love for work at home to be a permanent stay, to be honest, because the amount of pollution that gets removed, the amount of time that gets saved. Frankly, the only reason people need to go to the office for the most part is because their bosses don't trust them. But there are so many ways you can work online. Anyway, Kyle says, could raise the rates to the consumer, could help these companies help Uber and Lyft. Yeah, no, they could, and they've slowly been raising the prices on the consumer end, but not enough to be profitable. And Roger says, still didn't figure out how to be a member. I tried everything on my... Oh, well, you're not going to do it on your iPhone. You have to do it on a desktop. I think you have to do it on a desktop or an iPad or something like that. I don't think... well, hold on one moment. Let me check something real quick. Okay. Let me check something. Hey, Noah, how you doing? I'm good. Let's see, I can't really try it out on the phone because I'm using the phone, but... Oh, John Campia's live. Interesting. So, turn this off. So yeah, hey, I've got 11 likes and 3 dislikes. So there you go. But well, let's see here. The link in the description, you can click that. It's the first link. there's the join button next to subscribe or subscribe. It should be near the bell. And let's see. Is there any way I can join? I'm using a different account. Okay, so try this on your phone. You see that dollar symbol where you'd send the super chats? There should be super sticker, super chat, and join. And when you press join, that's how you can become a member of the channel. That's how you can become a member of the channel. So, It's Moose says they also lose money because of legal accounting practices they can use. I say because Uber sitting on $10 billion in cash. Well, they had a lot of funding for that. Also, I believe they stopped funding things like the self-driving cars. And another way they are constantly losing money is they are settling so many lawsuits. Jody says the commercials Amazon is showing on TV make them to be an A, as everyone knows by now what's been going on with them. Well, they're going to try to do what they can to change the narrative. That's rides adjusted EBITDA deliver. Okay, no. Here's the thing. Do not quote the EBITDA. Do not quote the EBITDA. The EBITDA is not actual money earned. That is projected money earned. EBITDA is an estimate of what they believe they will make or what they will lose. And that can always change. So that is not them saying, hey, we're actually profitable. That's them saying, this is how much we expect to make. And granted, 90% of the time, those numbers are way off. Not just for Uber and Lyft, but for every company. I've never seen a company rely on the EBITDA thing as much as Uber and Lyft. But that's because they don't have a business. That's why. So, there. Yes, it is. And EBITDA is an estimate. Like, what does EBITDA stand for? EBITDA meaning, earnings before interest, taxes, depreciation, and amortization. So, what happens when they throw in all those things? They lose money. There you go. A company's earnings before interest, taxes, depreciation, and amortization is an accounting measure calculated using company's earnings before interest expenses are subtracted as a proxy for the company's current operating profitability. But you want to know what the real numbers for success are? Net income, gross profit, gross margin. These are actual earning numbers. Like the EBITDA is totally an estimate, because it's like, hey, if we didn't have these expenses, this is how much we'd be making. So there you have it. But anyway, it seems you're pretty convinced that they are profitable. I've been reporting them in a long time, and here's the thing. In all the years I've been reporting their losses, every single quarter losses, they were never profitable until they said, hey, EBITDA. Hey, under the EBITDA model, we're very profitable. And it's like, yeah, bullshit. Because when you take that model away, you're operating at a negative still. So there you go. No, don't worry. We're just talking about stocks. That's all. So there you go. An equation, yeah. Kevin, it is not profitable with all the BS. Rideshare is profitable. Well, on paper, it's not. Now, to give you some credit, do I believe off the books they're profitable? Yeah, probably. But on paper, when it comes to stocks, there's no reason to invest in these companies. None whatsoever. So, there you go. Hey, let's do this here. I've never heard you swear before. Actually, I have sworn before. I rarely do though. I like to keep this a G-rated channel as much as possible. So there you go. So you you know, 8 to 12. So hey guys, let's do this for maybe 5 more minutes. This was supposed to be like an impromptu live stream anyway. I wasn't going to do this for an hour or so, but anyway. Noah says, I think they should be profitable, LOL. They won't figure it out. Yeah, and yet... Well, here's the thing. I'm going to say this. If they were profitable, they sure as heck aren't profitable now. So, I'm just going to say that. But... Also, even though they're losing money off Uber Eats is going to be their saving grace, because not only do they collect the delivery fee for the Uber Eats, but they usually collect like a certain percentage on top of the order. So like, there's a pizza place I go to all the time that sells like a $6 medium pizza. You buy it from Uber Eats, it's $7. So they're charging $1 on top of it. So Uber Eats is where they're going to ultimately be making their money. Yes, taxi drivers can claim unemployment. Actually, taxi drivers can definitely claim unemployment because they're actually... Well, are they employees? Actually, that's a good question. Hold on. Are taxi drivers employees? Yeah, they're employees pretty much. Although Noah would know better. Noah would know better. I'm just reading that off taxicabs.com, where they say a taxi driver, operator, or leasee is an employee unless such person is leasing a taxi from the owner of the taxi, and the owner of the taxi personally regularly drives the taxi an average of 40 or more hours per week. So I'm just going to assume yes on that one. Let's see here. Most are independent. Well, okay. They're saying, thank you, Google. You steered me wrong. So my actual taxi driver friends here are actually saying that they're independent contractors. Hey, Kevin, did you get the 600 for unemployment? You're still considered an independent contractor. Yeah, I am gonna be getting that. I'm also gonna be getting, some other things. So thankfully, I'm getting some assistance, and we can pay the medical bills. But, we're mainly getting that because Katie's being furloughed. So because of reduction in hours, she's getting that. So there you go. Hey, Kevin, how much time do you think Mr. Dara douchebag do you think he has on his way out the door? A year, maybe 2. I mean, I think he'll want to stay in to try to get the stock to a place where he could definitely cash in on his stock options, but he was definitely in a bad position before, and now he's in a really bad position. So, what came of the strike? Nothing. You know what happened with the strike? People decided to protest the beaches closing at Huntington Beach that day, and basically the media and the Twitterverse and Facebook paid attention to that and didn't pay attention to the Instacart or the Amazon workers striking. That's what happened. So, there you go. Nothing came of the strike. All right, hey folks, I'm getting tired, but thank you for joining me tonight. Thank you for the lively discussion / debate. Yeah. Despite the tension between me and I'm forgetting his name already. Clean MPG. Yeah, despite the lively debate, I actually kind of enjoyed that. So anyway, thank you for joining us. For everyone who might have been in the future watching this and you stuck around the whole time, thank you so much for sticking around. I'd like to know what your thoughts on all this are. Comment below, like, favorite, share, subscribe, and as always, flame responsibly. Have a good one.